Hey everyone, welcome back. Today we're going to really dive deep into Market Deep Dive's closing report from November 18th, 2024. It's pretty interesting stuff.
Yeah, it is.
Tesla versus Nvidia.
Yeah. Real tale of two mega caps.
Exactly. So Tesla ended the day up by 5.62%. Pretty impressive.
It is.
While Nvidia slipped 1.29%. What do you think is behind this divergence?
Well, for Tesla, I think the excitement is all about that potential federal support for self-driving cars, with the incoming Trump administration.
Oh, right, yeah.
That kind of backing could be a game changer for their autonomous vehicle ambitions.
So does that mean we could actually see self-driving Teslas like cruising across state lines anytime soon?
It certainly has the potential to accelerate things.
Wow. Okay, so that's exciting. But then on the other hand, Nvidia, they dipped. That's linked to concerns about overheating issues with their new Blackwell graphics processing units, right?
Right.
Which are, of course, crucial for all the AI applications.
Yeah, definitely a key part of that whole world. Okay, so potential win for Tesla, potential hurdle for Nvidia. How did this all play out in the broader market?
Well, despite Nvidia's stumble, the market actually had a pretty decent day.
Yeah, seems like it.
The S&P 500 climbed 0.4% to close at 580,293.62, and the Nasdaq Composite gained 0.6%. Ending at 18,791.81.
Okay, and the Dow Jones?
Even the Dow, despite a slight dip of 0.1%, still finished at a respectable 43,389.6.
Wow. Market Deep Dive actually pointed to the buy the dip mentality as a contributing factor to these gains. What are your thoughts on that?
Well, it's an interesting observation. I mean, the buy the dip strategy can certainly be profitable at times, but it's always important to understand like the underlying reasons for the dip.
Yeah.
Are investors truly confident about the market's, long-term prospects, or are they just reacting to these short-term fluctuations?
Right, that's a good point. I guess blind optimism can be kind of risky. Speaking of risks, let's go a little bit deeper into this Nvidia situation. Their management is kind of downplaying the overheating issue, but how concerned should investors really be?
Well, I mean, any delays in shipments, those could impact the rollout of new data centers for companies like Alphabet, Microsoft, and Meta Platforms, who really rely heavily on these chips for their AI infrastructure.
Yeah,
And, that's a pretty significant ripple effect to consider.
it is, yeah. It seems like NVIDIA's upcoming earnings report on Wednesday is going to be under some pretty intense scrutiny. Do you think they'll be able to pull off another earnings surprise, or will this overheating issue kind of overshadow their performance?
Well, it's certainly a pivotal moment. Investors are going to be looking for reassurance that NVIDIA can navigate these challenges and maintain their leadership in the AI space.
Okay, well, let's switch gears a bit and talk about the retail sector. This coming week is jam-packed with earnings reports from major players, Walmart, Lowe's, Home Depot, and of course, Nvidia. So what are your expectations for retail performance?
Well, the market is anticipating a potential improvement. Based on the recent positive data, including Friday's retail sales figures. However, it's important to remember that these retailers are kind of facing a mixed bag of challenges and opportunities.
Yeah, for sure. Tell me a bit more about these contrasting performances.
Walmart, for example, had a strong previous quarter. They cited a robust consumer base.
Interesting.
On the other hand, Lowe's has been dealing with falling housing demand and the impact of those high interest rates on renovation projects.
Yeah, it seems like those high interest rates are kind of weaving their way through the entire economic fabric these days. It'll be interesting to see how the Federal Reserve kind of navigates this complex landscape.
Indeed. Aside from the retail earnings, we also have several important economic reports coming out this week,
No, right.
which will shed more light on the overall health of the economy.
Okay, let's break those down. What should we be paying attention to?
Okay, well, we've got October housing starts and building permits coming out, followed by existing home sales. These will give us a bit of a pulse check on the housing market, which is always a key indicator of economic activity.
For sure. How about inflation? Any updates on that front?
We'll be getting inflation updates from Canada and the University of Michigan Consumer Sentiment Report, which will also provide valuable insights into consumer confidence and inflation expectations.
So these reports could be a bit of a roller coaster, huh?
They certainly can move the market, especially if they deviate significantly from expectations.
Right. And speaking of things that can really move the market, the Atlanta Fed's GDP Now indicator will also be on everyone's radar. Can you explain a little bit more about this indicator and why it matters?
Sure. The GDP Now indicator provides real-time estimates of GDP growth.
Hmm.
based on the available economic data.
Oh, okay.
Any significant changes in this indicator can influence Treasury yields and market sentiment.
So it's like a little sneak peek into the economy's performance before the official GDP figures are actually released?
Exactly. It gives investors a sense of the economic momentum, which in turn can then influence their investment decisions.
Gotcha. How about the global picture? Any international developments we should be keeping an eye on?
Definitely. We're seeing a pretty interesting dynamic with cash flow into equities and reduced interest in treasuries, particularly from overseas investors.
Oh, interesting. Why is that happening?
I think it can be partly attributed to the strength of the U.S. dollar.
And why is that?
Well, a strong dollar can make U.S. assets more attractive to foreign investors, driving up demand for equities. However, it can also have kind of a mixed impact on different sectors.
Okay. Yeah, that's really interesting. What are some of the potential positive and negative effects of a strong dollar then?
Well, on the positive side, it can benefit commodity prices, as commodities are typically priced in U.S. dollars.
Okay.
But on the downside, it can make U.S. exports more expensive abroad, potentially hurting multinational companies that rely on international sales.
Right. So it's a bit of a balancing act. With all these factors at play, it seems like the market is in for quite a dynamic week.
Absolutely. The coming days will be filled with data releases, earnings reports, and economic updates, all of which, could swing market sentiment in different directions. While we're waiting to see how these various reports play out, the market is also eagerly anticipating any hints about future interest rate changes.
Yeah, for sure. It's true. It feels like everyone's trying to decipher the Federal Reserve's next move. So what's the current outlook? What are the experts saying?
Well, the CME FedWatch tool, which analyzes market data to predict the probability of future rate changes, it's showing some interesting trends. As of late Monday, it indicated a 62% chance of a 25 basis point rate cut at the December FOMC meeting. That's scheduled for the 17th and 18th.
Okay, so a rate cut is looking likely, but it's not a certainty. There's still a 38% chance that rates will stay put. So what factors are contributing to this uncertainty?
I'd say one key factor is the recent shift in tone from Federal Reserve Chairman Jerome Powell. While previous statements hinted at potential rate cuts, his more recent remarks have been more cautious, kind of suggesting a wait-and-see approach.
Yeah, that makes sense. It seems like the Fed is trying to strike a balance between supporting economic growth and keeping inflation in check. What about the longer-term outlook? What are the projections for 2025?
Currently, the market is predicting 3 to 4 25 basis point rate cuts in 2025, which would bring rates down to below 4%. However, it's worth noting that this is still projected to be higher than the Fed's last projection of 3.4%.
Okay, so there's still a lot of room for those projections to shift as we get more economic data and hear more from the Fed. Speaking of which, didn't you mention something about a dot plot?
Yes, the Fed will be updating its dot plot of rate projections next month. The dot plot is a visual representation of where each member of the Federal Open Market Committee sees interest rates heading in the coming years.
Oh, okay, that makes sense. So it's a way to kind of get a glimpse into the Fed's collective thinking on interest rates. Sounds like that dot plot will be a major event for market watchers.
Definitely. It can provide valuable insights into the Fed's overall strategy and how they plan to navigate the current economic landscape.
Amidst all these numbers and projections, I can't help but feel a sense of anticipation in the air, like we're on the cusp of something big.
I think you're picking up on a real sentiment in the market. There's a sense of excitement about the potential for economic growth and innovation, but also a degree of uncertainty about global events and the future direction of interest rates.
It feels like a game of chess, with each move having the potential to reshape the entire board. And right now, all eyes are on Nvidia. Their upcoming earnings report could be a major turning point, either confirming the market's bullishness on AI or casting a shadow of doubt over its future.
Yeah, NVIDIA's performance is often seen as a bellwether for the tech sector and the AI industry as a whole. Their earnings will be a key indicator of how quickly this technological revolution is unfolding.
It's almost as if NVIDIA's success or struggles could influence the fate of the entire AI dream.
That might be a bit of an overstatement, but it's true that their performance carries a lot of weight in the market. Their earnings report will undoubtedly be one of the most anticipated events of the week.
So as we wrap up this part of our deep dive, the question on everyone's mind is, will NVIDIA deliver another earnings surprise and keep the AI momentum going?
That's the million-dollar question. And unfortunately, we don't have a crystal ball.
Well, I guess we'll have to stay tuned and see how it all unfolds. But one thing's for sure, the stakes are high, and the market is watching intently. It's amazing how one company's earnings can create so much buzz It's almost like it's a barometer for the whole tech industry.
Well, it's because certain companies just become so intertwined with broader technological trends. Nvidia, in this case, is so deeply connected to the growth and adoption of AI. Their performance is seen as like a reflection of how quickly AI is moving from just a concept to reality.
Yeah, and it's not just investors who are captivated by AI, right? I mean, it's already changing the way we live and work in so many ways.
Exactly.
Think about how we search for information, interact with our devices, even how businesses operate. I mean, AI is everywhere.
It is. It really is. AI is no longer just some, futuristic fantasy. It's here, and it's evolving rapidly.
Yeah, it is.
And as AI continues to advance, the demand for, that high-powered computing, the kind that NVIDIA specializes in, that demand's only going to surge.
Right, so NVIDIA's earnings report isn't just about their profits then. It's about gauging the momentum of this whole technological revolution.
Yeah, that's a great way to put it. Their performance gives us a snapshot of, where we are on this journey into the age of AI.
So let's bring this back to our listener. Why should they care about Tesla's surge, NVIDIA's slowdown, and all these market movements we've been discussing?
Well, for one, I think it just underscores the importance of staying informed, about the forces that are shaping our economy and the technologies driving innovation. Even if you're not like actively trading stocks, understanding these trends can help you make smarter decisions about your investments and just your financial future in general.
For sure, it's all about connecting the dots between these, seemingly complex market events and then their real-world impact on our lives. Self-driving cars, advancements in AI, the global dynamics of trade, these are the things that are actually shaping our present and our future.
Absolutely. And as we've explored today, there's often like a human story behind the numbers. We saw it with Tesla and Nvidia, two companies facing, different challenges and opportunities, each playing a role in this larger market narrative.
Right, it's like a puzzle, with each piece revealing a little bit more of the big picture. And sometimes I think the most insightful moments come from those unexpected twists and turns.
Yeah, like Nvidia's overheating issue. It kind of highlights that even, cutting edge technologies, they can encounter unforeseen obstacles.
Yeah.
And those obstacles can then ripple through the entire market.
So as we conclude our deep dive into this closing market report, the big question still remains. Will NVIDIA overcome this challenge and continue to lead the AI revolution? Or will this be, kind of a turning point in the tech world?
It's a question that has the market holding its breath.
Hmm.
And unfortunately, we don't have a crystal ball.
Well, I guess we'll all just have to wait and see how things unfold. Thanks for joining us for this deep dive. We'll be back soon with another look at the forces shaping our world.